Welcome back, everybody, to another deep dive. This time, we're strapping in and tackling swing trading
Oh, yeah.
with the one and only Alan Farley. We're going to be pulling some really interesting points from a YouTube video called Master Swing Trader. It's the full audiobook
Nice.
uploaded by Quantum Wealth, which is the name of the channel.
Cool.
So get ready to level up your trading game because we're going to
Yeah.
break it all down.
This is going to be good. This is exciting stuff. This is really not just a trading strategy. It's more of like a whole mindset shift.
Right.
Farley really focuses on understanding how emotions work, how they drive the markets, and how you can use that, but more importantly, how you can control your own emotions.
Absolutely. And before we even get into
Yeah.
looking at charts and strategies and stuff, what even is swing trading?
So swing trading is all about capitalizing on those short to medium term price swings that we see in stocks or whatever you're trading. Could be anything. Think of it like you're surfing. You're not trying to control the ocean.
Right.
You're just trying to ride the waves, man.
I love that analogy. That's really good. So we're not holding long term like a buy and hold investor.
Right, exactly.
We're looking for these.
Yeah, you're looking for the juicy swings.
Yeah.
That's it.
Volatility is the key.
Yeah, exactly. And the cool thing is markets, they only trend like 15–20% of the time.
Oh, wow.
So all the rest of the time, it's oscillating, swinging back and forth. And swing traders, we love that. We want that volatility because that's where the money's made.
That makes sense. So how do we even begin to find these opportunities?
So Farley talks a lot about what he calls pattern cycles. It's like the language of the market.
Yeah.
And it's spoken through these patterns. And by learning to identify those patterns, like flags and pennants and all that, you can actually see what's happening.
Okay. Pattern cycles. This is starting to sound a little mystical, like I'm trying to look into a crystal ball.
Yeah, no, but they're actually really practical. They're just recurring formations that you see on charts.
Okay.
They give you clues about what the market's about to do.
So it's like reading footprints in the sand,
Exactly.
seeing where it's been and trying to anticipate where it might be going.
Totally.
But charts are really overwhelming. Where do we even begin?
Okay, so this is another thing that Farley talks about is 3D charting, which is a really cool concept. You look at the price action across 3 different time frames. So the one you're trading on plus the ones above and below.
Okay, so instead of just looking at the daily chart, I'm also going to look at the weekly chart and the hourly chart.
Bingo. Yeah.
To get the bigger picture.
Exactly, yeah. 3D charting helps you see the bigger picture. It's like adding depth perception. You see the converging trends, potential turning points, and where the momentum is. Really cool stuff.
That's making a lot of sense. Now, what about the technical tools? Where do they come into this whole swing trading thing?
So the technical tools are your confirmation, right?
Yeah.
Farley says you got to go beyond the basics. Look at candlesticks, Bollinger Bands, that kind of thing.
Okay.
For example, candlesticks, they show you exactly what happened inside that bar. It's like a microcosm of the battle between the buyers and sellers.
So if I see like a long green candle,
Yep.
that means that buyers are in control for that time period.
Exactly. And if you see a long red one, that means selling pressure took over. It's a great, quick visual. Then you got Bollinger Bands. Bollinger Bands are great for visualizing volatility and potential price extremes. It's like price is contained in this dynamic band that expands and contracts with the volatility.
Okay, so if the price is kind of bumping up against that upper Bollinger Band,
Yeah.
that's probably a sign that that move is getting exhausted and we might see a pullback or reversal.
Bingo. That's one interpretation. So the tools, combined with your analysis of the patterns and the market sentiment,
Okay.
that gives you a really powerful edge.
Okay, market sentiment. Now, that's something I hear a lot, but what does it really mean for a swing trader? Is it just like trying to read the mood of the market? Like, are people
That's a great way to put it.
bullish or bearish?
Yeah, you got it.
Yeah.
Market sentiment is all about gauging the overall attitude of traders.
Yeah.
Are they bullish? Are they bearish? Are they somewhere in between? You really need to recognize the sentiment because it helps you interpret those trends and identify potential traps
Okay.
and just adapt to the market because it's constantly changing.
So it's not just about spotting a pattern on a chart. We need to understand the overall mood of the market and whether that mood supports the pattern.
100%, yeah. It's like understanding the context of a conversation. You might hear certain words, but their meaning changes depending on the tone of the conversation.
Yeah, makes sense. So swing trading is more than just technical analysis. It's understanding the psychology of the market, recognizing the patterns, and
Yeah,
then using those technical tools to confirm what we think is going on.
you got it. It all comes together.
So how do we put this all together?
All right, well, that's where things get really exciting.
Yeah.
And we're going to explore that in the next part of our deep dive. We're going to see how to interpret volume, build our own strategy,
Okay.
and master the mental game of swing trading.
All right. I am ready for part 2. Stay tuned, everybody.
This could be good.
Welcome back to the deep dive, everybody. We are in the swing trading trenches with Alan Farley as our guide. We've covered so much already: market psychology, pattern cycles, technical tools.
Yeah, it's a lot.
It's a lot. Now I'm really ready to see how we can put all this together and actually use it.
Okay, so remember, swing trading is not about predicting the future.
Right. Yeah.
It's about understanding patterns, understanding probabilities, and having a plan. So let's say you're looking at a chart
Okay.
and you see what looks like a double bottom formation. What would you do next?
Okay. Double bottom. That's where the price drops, bounces off a support level,
Yes.
drops again to about the same level, and then starts to climb back up. It's like the market is saying, nope, we're not going lower.
It's like, this is it.
Yeah.
Exactly. So that suggests that selling pressure is weakening, right?
Okay.
And buyers are starting to step in. But remember, not all double bottoms are created equal. We need confirmation.
Of course.
And one of the best ways to get that is through volume.
Okay, so we want to see increasing volume on that second bounce off the bottom.
Absolutely. That's what you want to see. You want to see a surge in volume, confirming that the move has conviction.
Like a big wave of buyers coming in
Yes.
to push that price back up.
Exactly. It's not just a few traders, it's a whole crowd. And if you see that confirmation, that might be a signal to enter a long position.
Okay, so we spot the double bottom, good volume confirmation. We've decided to take the trade. What's next?
Okay, so now you need an exit strategy.
Okay.
Remember, swing trading is all about managing risk. We need to figure out our profit target, but more importantly, our stop-loss level.
Right, our stop loss. That's where we say, okay, the trade is not working out. This is where we get out when there are losses.
Yeah, like an insurance policy.
Yeah.
Exactly. A stop-loss order protects you from those unexpected market turns and helps you stay disciplined. And Farley emphasizes that setting a stop-loss is not about being negative. It's about being realistic.
Right, okay. So we've got our entry point, our profit target, our stop loss. Everything's in place. We just sit back and watch, right?
Well, not so fast. The market is dynamic. It's constantly changing. What if the price breaks through that previous resistance level with huge volume?
Okay, we're talking about a breakout.
Breakout.
Yes.
The exciting part.
This is where things get exciting. That's where the stock takes off. But breakouts, remember, they can be tricky. You have to be wary of false breakouts.
So how do we know if the breakout is real or if it's just a fake out?
You got to watch the price action after the breakout. Does the volume stay strong
Okay.
or does it fade?
Right.
Does the price hold above that breakout level or does it fall back below?
So we're looking for that follow-through to make sure the follow-through. Yes.
Really has some legs.
Exactly. Now let's say the trade is going great. Price is climbing. Everything's looking good. But then we see a pause, a period of consolidation. What do we do?
Oh, man. Do we panic?
No.
Do we sell everything?
No. Those pauses are actually normal.
Okay.
They're called continuation patterns, and they're very common in a healthy uptrend. Think of it like pit stops during a road trip.
I like
You
that.
got to refuel before you can keep going.
Okay, so instead of freaking out, we look for those continuation patterns. Flags, pennants, triangles.
Bingo. Exactly.
These tell us the trend is likely to resume.
Right. And they often form after a strong price move. They're like a breather before the next leg up.
Okay.
And it can actually be a good time to add to your position if you're feeling confident.
But again, we need to be careful of fake outs, right? Not all of those.
Oh, of course.
Yeah.
Always. Always watch the volume and the price action.
Mm.
If volume starts drying up inside the pattern, that's a warning sign.
Right. It's like the music stopped and everybody's
Party's over.
leaving the party.
Yeah, exactly.
Okay, so interpreting volume is key. It's like listening to the heartbeat of the market. You're understanding how much conviction there is behind each move.
Yes, exactly. Now let's fast forward. The trade's been running for a while. The price is climbing. We're starting to see maybe some euphoria, like parabolic moves, huge volume spikes. What does that tell you?
Sounds like things are getting a little crazy. Like it's,
Too good to be true.
yeah, too good to be true.
Yeah, yeah. That's often a sign that the rally is getting tired
Okay.
and a reversal could be coming. And remember, one of the keys to swing trading is knowing when to take profits. Don't get greedy.
Right. So sometimes the smartest move is to just take the money and run.
Exactly. Sometimes you got to walk away.
But what if we miss those exit signals and the market turns against us? How do we recognize those potential reversals?
Okay, so Farley talks about a few key patterns that can signal a shift from bullish to bearish, like the head and shoulders pattern, for example. It's a
Yeah.
classic reversal formation.
Head and shoulders. Wait, I'm picturing a chart that looks like a head and shoulders.
Yeah, exactly.
Okay.
Pretty easy to
Yeah.
recognize, right? And it can be a really powerful signal. But again, you need confirmation from other indicators, volume, price action, the whole picture.
So if we see a head and shoulders pattern forming with increasing volume on those downswings, it's a sign that the sellers are in control.
Exactly. And a downtrend could be starting. And once those reversals gain momentum, you can actually look for opportunities to enter short positions,
Okay.
profit from the downward swings. But shorting, that can be risky. So make sure you understand what's happening and what your risk tolerance is.
Of course. Okay, wow, we have covered so much. Breakouts, double bottoms, continuation patterns, reversals. It's a lot.
It is a lot.
But I'm starting to see how all of these patterns, the tools, the market sentiment, how it all fits together. It's like we're learning to read the story the market is telling.
You got it.
But it's obvious that there's a whole other side to swing trading, the mental game.
Oh, yeah. The mental game is huge. And that's what we're going to dig into in part 3.
And we are back for the final part of our swing trading deep dive with the main man, Alan Farley. We've covered so much ground, patterns, tools, market psychology. It's like we're building a swing trader's toolkit.
It is, yeah.
But now it's time to talk about the most important tool of all, the one that really separates the winners from
Oh, yeah.
from the everyone else, the mental game.
Yeah, you're right. This is where it all comes together. Swing trading, maybe more than any other style of trading, it really requires emotional control
Right.
and discipline. You're constantly dealing with these emotional waves in the market. Fear, greed, all that
Right.
can really sweep you away if you're not careful.
It really is like trying to surf in a hurricane.
It is. It is.
So how do we stay grounded when everything's so chaotic? How do we avoid getting caught up in the emotional roller coaster?
So Farley gives some really good advice in his book. He talks about this idea of pre-market preparation. And that's not just looking at charts, but also preparing yourself mentally.
Okay.
Before the market even opens, you should know what's going on in the market.
Okay.
What setups you're looking for, your entry points, your exit points.
So it's like having a game plan, a roadmap for the day. You're not just reacting to every single thing that's happening.
Exactly. You have a plan. You're not just driven by emotions. You're thinking clearly.
Right.
And that helps you stay disciplined even when the market's going crazy, which it always does.
Right. Of course. Of course. Now, speaking of sticking to the plan, let's talk about risk management. It's got to be the foundation of any good trading strategy, but especially for swing trading.
Yeah, risk management, this is where it gets real, right?
Mm-hmm.
It's all about protecting your capital, knowing how much you're willing to lose on
Okay.
any trade, and having those stop-loss orders in place.
Yeah, our stop loss. It's like that line in the sand.
That's it.
Like, this is where I get out no matter what.
Exactly, like an insurance policy for your trade.
Mm-hmm.
And Farley really stresses that setting a stop-loss is not about being negative, it's just being smart.
Realistic.
Yeah.
Okay. So we've got the stop loss, but how do we know how much risk to take on each trade?
That's where position sizing comes in. You never want to be overexposed in any one trade. Even if you're super confident, you could be wrong. So don't put all your eggs in one basket.
Spread the risk.
Exactly. Keep those positions small, manageable. That way you can handle those losing streaks, because they're going to happen, without blowing up your account.
Right, right. And consistency is key.
Yes.
Making those small gains over time.
That's it. Slow and steady.
Not trying to hit a home run every time.
Exactly. It's a marathon, not a sprint.
Right, exactly. And so I'm seeing now how the risk management, position sizing, it all ties into that disciplined mindset. You've got to have a plan and you've got to stick to it.
You got it.
Emotions cannot dictate your decisions.
Yeah, emotions will make you broke in this game.
Right, of course, of course. Now, there's one more thing that Farley talks about that I think is super important, and that is emotional detachment.
Yeah, that's a tough one.
Yeah, it sounds a little bit cold,
It does.
but I guess it's about not getting too high when you win, not getting too low when you lose.
Yeah, you can't ride the emotional roller coaster. You can't get too attached to your trades. Don't let those wins get to your head,
Right.
and don't let the losses destroy you.
So treat each trade like a business decision.
Yes, it's a transaction.
Yeah.
That's it. The market does not care about your feelings. It's a machine.
Yeah.
So if you let your emotions cloud your judgment, you're going to make mistakes.
You're going to big mistake.
Big mistakes, yeah.
So it's all about being objective, sticking to the plan, managing the risk, and focusing on the process, not the outcome of every single trade.
That's it. That's the Farley wisdom right there.
It sounds like swing trading, it's like this journey of self-discovery as much as it is about making money.
100%, yeah. You're mastering your mind just as much as you're mastering the market.
Absolutely. And of course, this has just been a little taste of what Alan Farley has to offer.
Yeah, we're just scratching the surface.
Just a starting point, but hopefully a good one. So as you continue on your swing trading journey, remember what we've talked about,
Yes.
recognizing those patterns, market psychology, technical tools, risk management, but most importantly, building that disciplined and emotionally detached mindset.
So important.
It's all connected.
It is.
So ask yourself, what patterns are happening in the market right now? What are the opportunities? But most importantly, am I ready? Am I mentally and emotionally ready to take advantage? Great questions to think about. As we wrap up this swing trading deep dive,
Yeah, it's fun.
hopefully it's been insightful, got you thinking about things in a new way.
Absolutely.
But remember, knowledge is power.
It is.
And in swing trading, that power comes not just from understanding how the market works, but understanding yourself. So until next time, everybody, keep learning, keep exploring, and happy trading.